Good afternoon, everyone. I'm Relph with Comstock Investments. I stole the Comstock channel from Marlon for a couple days here, so hopefully I can fill his shoes that are a little difficult to live up to. So we'll see if we can get this done. But want to talk about what went on this week, and particularly here the last couple of days in the grain markets, as well as cattle on feed report this afternoon, and try to decipher what does this mean moving into the next two holiday weeks, where we have the holidays falling right in the middle of each of the next 2 weeks, with Christmas and New Year's falling on Wednesday. Going to see some really light volume, could see some chaotic moves for really no reason other than the volume is low, and it doesn't take a lot to steer directionally when that's the case. So some things to consider as we move through the next couple of weeks in that scenario. Before I get into the details of the week, I want to remind and encourage everyone to like and subscribe to the channel and the videos. And if you're so inclined, take a visit to our website at comstock.com and subscribe for a trial of the premium content for just $1. You can get 30 days of our written reports as well as our morning videos that I do, and get that twice a day report sent directly to your emails. Think about that. I encourage you to at least go take a look. Call us if you have any questions about it. We can kind of explain how that works. This week was just jam-packed with stuff. We had Fed announcement on Wednesday. We had support levels taken out in several key grain contracts, particularly the soybeans. And it looked like it was just doomsday for the soybeans, and it ended up kind of being a little short-term bear trap. But how much can we get back out of that? Who knows? It's one of those scenarios where Brazil has this huge looming crop and private estimates continue to inch higher. But then you're starting to hear some adverse conditions in Argentina. And what does that mean for the overall South American production? And nevertheless, I mean, with the currency situation with the dollar versus the real, Brazil definitely has the upper hand, and we saw that in the U.S. markets the first 3 days of the week where we just collapsed. Going to take a look at what that action looked like earlier in the week. So looking at the January soybean contract, and you can see here, you go back to Monday, we traded lower on Monday, still holding where we needed to. Tuesday probed some critical support, which was the August low, but then finished back above it. So it didn't look like the end of the world. And then Wednesday just obliterated that support, traded 25 cents lower, then made fresh new lows and overnight the following night. That was Wednesday night, down to 945 in a very short amount of time. In the January contract, you set back from 998 to 945, but then bounced right back, finished the day higher, saw follow through today, back up above that support level to finish the week. So not a terrible looking weekly setup here. I'm going to flip this from the daily to the weekly. Although lower, finished right above the support level that it needed to. Is that all we're going to see? I mean, if you look at the resistance on the weekly, we tested the resistance, and this is a pretty sharp downtrend, obviously, but this descending wedge, we went through the bottom, finished back above it. That's a good sign. We tested the top, couldn't get through it. That's a bad sign. So what does this mean moving forward? Well, if we think about Argentina as one of the main drivers, we've got to flip over and look at the meal, because they control about a third of the total global exports of soybean meal. They are the game when it comes to meal, and really saw a nice turnaround today, finished sharply higher. There's an old saying that a meal rally is a real rally. Taking out multi-week highs and closing at the top of the range was a really nice look for the meal. If that's going to see follow through, maybe there is a story for soybeans. But I wouldn't hold my breath for that. We did advise some sales today in both corn and soybeans. Those orders both hit. We sold 971 January, which translated to about 974 in the March. And we sold 444 corn. Did have some additional sales that people were putting on in the 445 to 447 range. So taking advantage of this rally as an opportunity to make some sales, I think that's a reasonable thing to consider, given the overall trend of the markets and the story that's been leading up to the last 2 days. We don't want to get too emotional in the short term, but definitely something to think about there if you haven't already done so. Shifting a little bit over to the cattle market. Cattle did have a nice finish to the day today, but it has been kind of a bumpy week here. January feeder cattle traded lower 3 of the 5 sessions this week and finished on a positive note after holding yesterday's low on the session today. So not a total loss there, but still not a great look, as again, it was a lower finish for the week. So we'll just have to see how the trade digests this cattle on feed report and how we come out swinging next week. I would add that the January feeder cattle are currently about a $6 deficit to the CME cash feeder cattle index. Additionally, December live cattle are running about a $2.50 deficit to the weighted average cash price currently being paid in the country with only a week left in the month. These are things to consider. Could we see a little bounce back just based on the fundamental influence of the cash versus the futures? Absolutely. The cattle on feed report today came out at 2:00, and I kind of sarcastically called it wildly neutral. We expected 100% on feed. That's what we got. 96% placement. That's what we got, which surprised me. I'll talk about that a little bit. And 98% marketing was the expectation. We saw 99% marketing. So a little better marketing than what was anticipated. Normally they nail that number. This was a little bit supportive in that regard. I was surprised to see the 96% placement that I mentioned, because November was when we were stocking all this wheat and grass, and it seems that all the pasture and stockable ground was really plentiful. I just didn't expect that we were going to see a 96% placement. I thought it would be something more like a 92 to 94. The fact that we did live up to that expectation would make this thing fairly neutral, given the fact that we sold off this week a little bit. Maybe it lends a little support, especially with that slightly higher marketing number. So that's something to consider. This is a unique scenario we have where the funds are so long in the livestock leading into the end of the year. Do they continue profit taking all the way to the finish, especially since we're going to have such light volume for the next 2 weeks from industry participants? I mean, this is a unique scenario where we have no sale barns really moving any cattle over the next couple of weeks. I think Joplin's having one sale on the 30th. That's the only major market that I know of that's having any kind of notable sale. That's going to be a week from this coming Monday. I don't know of any sales going on during Christmas week. If they are, they're going to be fairly light volume. The buyers just aren't present. We started to see the plateauing cash in feeder cattle fall off a little bit this week. We had spiked up there when we were buying stockers hand over fist a few weeks ago and kind of leveled off here over the last 2 weeks. Now we're starting to see that drop off. If Bassett doesn't have a sale for the next few weeks, that can kind of nip things in the bud a little bit too, because Bassett can really energize that index number on any given week because they do sell such premium cattle at premium prices. So a lot of things going on here that could knock this cattle market a little bit. And with the funds holding that long position, it makes me a little bit leery going in. But this report did not live up to the bullish expectations that I had. I know a lot of people were looking for lighter placement numbers and we just didn't get them. Makes me question what the head counts are actually like, and apparently we're not holding any heifers back just yet, so that'll prolong the bullishness in the overall market for who knows how long. So we'll just have to see how that plays out. Want to take a look at a few of the outside markets and some stuff that went on this week that was just pretty remarkable. One thing that jumps to mind is the cocoa. This past spring we made a new all-time high in cocoa and then damn near doubled it. I think that caught everybody off guard. Then we made another new high here about a week and a half ago, made about 3 more new highs after that. You can see on this daily chart, it's just been unbelievable rally. Now we did see a break the last 2 days, finally got some closes down here at levels to make you think that might have been the high that we saw on Wednesday. This is not an easily tradable market. It is highly volatile, but this is one that people have been kind of making note of along the way, as well as the coffee. But we'll look at that here in just a second. These soft markets have just been ballistic. It seems like anything that's traded on the ICE exchange out of New York has been parabolic at times. And we've definitely seen that for a second time in 2024 in the case of the cocoa. Is this the beginning of profit taking that's going to tail off all the way into the end of the year? Very well could be. If that's the case, I mean, we could see a 2,000 or 3,000 point drop in a pretty short amount of time. This is definitely an interesting development, and the coffee not quite as chaotic now. We've kind of been grinding sideways for a couple of weeks, but you can see it did go parabolic over the month of November, saw a little break late month and then rallied back to start December. So that's been a big mover, obviously a huge uptrend, and still maintaining that when you look at the broader picture. Even though we have been sideways here, will the coffee go up and make another new high? Who knows, but the potential definitely exists. These are some of the markets that have been catching attention to traders that maybe those in the ag sector don't look at a whole lot, particularly in the heart of the Corn Belt. We don't even look at the cotton market all that much. It's definitely not high on our priority list, but that's another one. I mean, it's just kind of been a gutter ball here for the last several weeks and down at near contract lows in some of these, and looks kind of like it's begging to be bought here. So this is something that we've been kind of eyeballing as well. I bring this stuff up because these are some of the things that we have to pay attention to as brokers, although they may fly under the radar for you as producers and Midwest corn, soybean, and livestock growers. And definitely other things out there to consider, even though maybe some of our primary markets have been a little stagnant here of late. Monday afternoon, I'll be back on the Comstock channel with Justin McKinney out of our Rochester office. We're going to be talking about the hog and pig report. We've got cold storage coming out as well. But the hogs did have a really nice day today. It took out several days worth of highs and finished back near the upper end of the week's range. February contract up 230 at 85.92. I think that's preparation for what we might see on Monday. Hopefully the report will live up to the hype. We also saw a little spike up in the midday cutout today. If we could hold that to the close, that would definitely be a positive. We'll just have to see how that shakes. Following the Fed announcement on Wednesday, when Jerome Powell spoke at 1 o'clock, we saw the equity futures just fall apart. And I want to look at the Dow Jones because that seems to be the one that everybody focuses on the most. You could see that fall off on Wednesday. I mean, we were down 1,100 points at times after kind of spiking up on Tuesday a little bit. Yesterday stabilized at least and kind of looked like maybe we'd see a little positivity. And then this morning we were down several hundred points again and tested that 100-day moving average in the Dow Jones futures almost to the tick and rebounded off of that very nicely. Although we didn't hold the high, still up over 500 points here this morning. We get these December contracts out of the way in the NASDAQ, S&P, and the Dow, and maybe we'll see what the reality of this looks like. But this is a pretty nice finish to the week given what we saw on Wednesday. And as has often been the case, every time you see that slam dunk and you think, okay, we're finally going to get a real correction in the stock market, it goes right back up. And wouldn't be surprised if we make new highs anytime in the next several weeks. You can see the last time we had that hard break, we just rally right back up new high, and then we get another hard break, rally back up new high. This could be a continuing trend here for the equity futures. With a new president set to take office in a month, it's going to be a little bit edgy, I would suspect, and the dollar is going to be doing the same. Following that Fed announcement, we did see a sharp spike up in the dollar, and that's where a lot of the money was flowing to. That was a result of not the quarter-point rate cut, which everyone was expecting. It was that they reduced us from a chance of 4 cuts next year to 2. So instead of a full point, maybe only get a half a point next year. A lot going on, a lot of moving parts, and low volume always makes things exaggerated. So some things to consider as we move through the end of the year here. I hope that you guys can reach out and we can help you decipher how to navigate these waters a little bit and maybe give that premium subscription a try if you haven't already. So that's what we got for this week. I'll see you back here on Monday with Justin and talk about Hog and Pig Report. You all have a great weekend.
Futures trading involves risk. The risk of loss in trading futures and or options is substantial, and each investor and or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.